Gold and silver. Gold is definitely in buy more, buy mode now. Typos. It is definitely by many measures way ahead of itself going into this, right? In correlation terms, in every term that banks will look at, it's ahead of itself. And we do not like betting on stuff like this today. But the last data point we saw, the most recent data point, was actually hot, indicating less chance of a bigger rate cut. And gold took off anyway. So that meant there was a lot of money, and we said this back then, there was a lot of money still looking for dips to buy.
One argument for implementing a 25 basis point cut instead of a more aggressive 50 basis point reduction is based on the notion that the Federal Reserve typically reserves larger cuts for more economically severe situations. Since the Fed began communicating interest rate changes in 1994, it has shifted from a neutral to a cutting stance 6 times. In previous cycles, specifically in 1995, 1998, and 2019, the Fed began with a modest cut of 25 basis points. In contrast, deeper cutting cycles were initiated in early 2001 and 2007, and during the COVID-19 pandemic in March 2020, each starting with a more significant 50 basis point reduction. This historical pattern indicates that the Fed may be willing to take decisive action in the face of more pressing economic challenges. Many analysts believe a 50 basis point cut in interest rates is reserved for more critical economic conditions. Vince Lanci points out that if the Federal Reserve implemented such a cut, it would likely boost stock markets, as investors typically perceive increased liquidity as a positive indicator. In contrast, a more modest 25 basis point cut might lead to declines in stock prices, signaling broader concerns about the economy's health. The implications for the gold and silver markets are also noteworthy. A 50 basis point reduction could make gold behave similarly to high-growth tech stocks, potentially leading to significant price increases. Meanwhile, silver may attract heightened interest and outperform as investors seek safe havens. On the other hand, a 25 basis point cut could result in a temporary dip in gold prices. However, gold's inherent value as a hedge against economic uncertainty is expected to facilitate a swift recovery. Despite some challenges, silver demand is projected to reach new heights in 2024. This expected growth underscores silver's vital role in industrial applications and as an investment asset, reflecting ongoing changes in the market dynamics. We will present clips from Vince Lanci's latest interview with Arcadia Economics. Please watch, share, and like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
The Fed's cutting right after a hiking cycle. This is really a pivot. They're cutting because they have to, not because they want to. All right. So you can make the case that 50 basis point cuts is bearish for stocks. You would be wrong. You would be right to say a 50 basis point cut at the end of a calamity, like the banking crisis that we had in 23, would be a sign that more can come and the market could sell off some more or the problem is bigger. But we're not showing a calamity right now. 50 is bullish and 25 is bearish. Let's work with the grid. The simple behavioral grid is if you want to watch this, grab some popcorn, grab your favorite beverage. I don't care. But the market thinks the Fed will cut 37.5 basis points now. They don't do that. What should stocks do if they cut 25 basis points? They should go lower. What should they do if the Fed cuts 50 basis points? They should go higher. What will they do in either case will be a reflection, what they will actually do in either case will be a reflection of the greed and fear pent up in the market. That applies to gold as well. I want to just, stocks will go lower if the Fed only cuts 25 basis points. But gold might catch a bid on a dip faster than stocks would because gold is not being bought fundamentally because of the Fed. It's being bought because of de-dollarization and global changes. But there will be selling. Gold will be sold if it's 25 basis points. How low it goes, I don't know. It might drop $1 and then rally $10. Who the heck knows, right? All right, 50 basis point cut. Oh boy, if that happens, expect stocks to rally and expect gold to act like a tech stock today. Silver will be like a tech stock on steroids. I think. I don't know. All right. So opinion. We'll give an opinion just to have one, right? We think he will do what he should do, 25 basis points, but we're not married to it. If he does 50 basis points, he either sees something horrible coming along, right? Like that grid I just showed you by Charles Below, which is unlikely, or he truly capitulated to political pressures and he will go down in history as Arthur Burns 2.0. If he cuts 50 basis points now, it's like waving to the fans before you cross the finish line, my opinion. Gold and silver. Gold is definitely in buy more, buy mode now, typos. It is definitely by many measures way ahead of itself going into this, right? In correlation terms, in every term that banks will look at, it's ahead of itself. And we do not like betting on stuff like this today. But the last data point we saw, the most recent data point, was actually hot, indicating less chance of a bigger rate cut. And gold took off anyway. So that meant there was a lot of money, and we said this back then, there was a lot of money still looking for dips to buy. The question we want answered today and why we're watching is, was this latest buying because gold is money, or was it just Fed cut FOMO? If it's because gold is money, then dips will be bought. If it's because it's Fed cut FOMO and a lot of idiots are in this market trading Fed cuts as the banks want them to now, well, then all bets are off $100 either way. All right, news items. There are lots of news items, but here's three on precious metals. Let's read the headlines. BRICS platform, an alternative to dollar. Euro attracts increasing number of nations. Okay, this is a story describing briefly the progress that the BRICS are attaining in their goal or bid to be independent from the dollar. It's a propaganda piece. Nevertheless, the fact that it's being printed is kind of interesting.
Recent developments have underscored the Federal Reserve's unpredictable decision-making. For example, the Fed raised interest rates even amidst significant bank failures, such as Silicon Valley Bank and Signature Bank. This decision suggests that the Fed is prioritizing its inflation-fighting objectives, despite ongoing turbulence in the banking sector. Additionally, rising inflation, which recently reached levels not seen in decades, has put increasing pressure on the Fed to act decisively. Many economists had anticipated a more cautious approach, particularly concerning the banking challenges. However, Fed Chair Jerome Powell has reiterated the central bank's commitment to curbing inflation, stating that stabilizing prices remains paramount for long-term economic health. Vince predicts that if the Federal Reserve decides to cut rates, it will be driven by a comprehensive evaluation of the economy, including factors like inflation, employment rates, and growth trends, rather than merely reacting to short-term challenges. The Fed remains focused on its long-term objectives of maintaining stable prices and achieving maximum employment. Investors and analysts should remain adaptable and closely monitor the economic indicators guiding the Fed's future decisions.
So this is usually locked down for premium, but we're going to share it with certain friends of ours publicly. All right. The Fed is to announce a cut at 2 p.m. What follows is something that I wrote this morning, trying to summarize things and prep everyone who is normal and not a wonk. All right. Number one, the discussion is over whether the Fed will cut 25 or 50 basis points. That picture right there is from Zero Hedge, and it shows the Fed funds upper bound, which is kind of like the chart I just drew you. It's showing either a 25 or 50 basis point cut if you zoom in on that. Quick aside, the rhetoric behind Democrat senators like Elizabeth Warren asking for 75 basis points, aside from the fact that it is borderline election tampering, is simply a ploy to move the Overton window and hopefully influence the Fed to cut 50 basis points while energizing their electoral base. It's all bullshit, sadly. Back to the task at hand. There's a lot of content out there and everyone has an opinion, and most of the opinions are valid, but they're from the perspective of someone with employment skin in the game, bank analysts, and I have skin in the game too. Let's be honest there. But anyway, I'm trying to find people that maintain objectivity, or at least are objective about their own bias. And here's what I came up with. The notice is that there are some smart, good analysts who are stressing about this. They say things like what the Fed should do is 25 basis points, but what I fear they will do is 50 basis points. I believe they're getting caught up in the nonsense. We would remind them and everyone watching this that the Fed raised 25 basis points at the peak of the banking crisis as people begged for a pause and a pivot. Rumors of Yellen banging on Powell's door didn't dissuade him then. Here, I'll show you the picture. There's Fed funds, March 1st, Silicon Valley, third largest bank failure ever. On March 10th, March 12th, Signature Bank, 12th largest bank failure ever. And then on May 1st, after he raised again in April, May 1st, the second largest bank failure ever, First Republic. So during what probably was known or expected events, he raised 50 basis points. If he cuts 50, it's because he thinks it's a good idea, not because you losers convinced him with Stir Futures. That's from oh God, he's a quantity analyst, and he's kind of right. By you losers, I think he means all of us collectively, not just me. My conclusion from polling and looking at everything else out there is what they should do, maybe what they do for a change. The Fed is more independent currently, nothing's permanent, than some think. And the beggarly behavior surrounding cut expectations is from a decade of being spoiled by a Fed that held the hands of Wall Street every step of the way.
While the Federal Reserve's anticipated rate cuts may not affect gold prices immediately, many analysts are optimistic about the potential for significant price increases in the coming months. For instance, analysts at Goldman Sachs forecast a target gold price of $2,700 per troy ounce by early 2025. Other experts also anticipate even more substantial gains for gold in the near future, suggesting a strong bullish sentiment in the market as economic conditions evolve. Drop your thoughts on Vince's analysis in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.